What do you see on this chart? It just looks like a whole bunch of noise, right? There's no real pattern here. Can't really see a good Elliott wave. What is this, right? This is just a whole bunch of noise, or is there actually some meaning to this? So apparently, this is something called the smart money concept, bottoming compression, and I used Copilot to give me these bullet points over here, which are some of the characteristics, the main characteristics of this pattern. So essentially, what this is smart money accumulating within this zone before a violent markup. So in case you're wondering how is this a bottom, well, I can zoom out and now you can see if I zoom out some more, right? So this is the part that we're just looking at over here. This is the bottom, right? This was the entire bear market, and this entire triangle, well, technically you're not supposed to call it a triangle, but this is the part we're looking at. This is a bottom compression, right? So some of the characteristics of this pattern is um, relatively equal lows, right? Lower highs, and we can kind of see that there. Wicks sweeping both sides, and I don't have the candle view on right now, but if I make it candle, you can see these wicks, right? Wicks everywhere, wicks on that side, wicks on this side, a gap up low here, right? I just made it simpler, but you can see these sharp turnarounds, a sharp turnaround here, sharp turnaround here, sharp turnaround here, right? You're not seeing, here's a very sharp turnaround. You're not seeing these like rounded type of bottoms, and that's the nature. No clean internal wave structure. I could kind of try to call this an ABC flat, but that's tough because if this was wave A, this is wave B, then what the hell is this swing high up here, right? So again, it's really tough to form an Elliott wave for this. And this pattern is by design. This is basically engineering liquidity, right? So in case you don't know that, if you have big money, you can't just go place buy orders like us retail traders. They have to engineer liquidity prior to a markup. So that would lead to a breakout, a fake out over there, fake out at the bottom, right? That's how they accumulate here. So that's how smart money or the big money have to engineer liquidity. Now, if I do wanna draw an Elliott wave, I could, like I said, call this a wave A. This is a wave B, and I think wave C is over, right? And here's why. I'll come to the main point. Why I think wave C is over. That's because of this, the volume. That bar over there, right, was this candle here. Look at the volume, right? This was one of the highest volume going back to the pandemic. You can see that there. The last time this volume was seen was when we had that Omicron news release, right? So that's on this, and that is exactly where a swing high was formed, and the bear market continued, and the stock crashed from there, right? So whenever volume, again, you can see high volume is at turning points. So this high volume, I think we have seen a turning point, right? So that's how I think, based off this, I think this was capitulation, and I think the bottom was in because we did get a sharp turnaround from there, right? So I think that is it. It should really not be going lower. I think re-rating starts here. We've got the catalyst. We've got the new hantavirus or whatever it's called. It's all over the news for the past couple days. So I think the catalyst is in. I just need to. I'm just waiting for the re-rating to begin. So coming back to this, um, so the nature of then how this pattern ends is with a final sweep, and I think this is that sweep, right? This is that sweep which I'm talking about was the capitulation week over here. This move was this sweep of all the lows, and that is your final signal to say, hey, I think this is the bottom is formed. So I think we got a double bottom, we got a strong rally, right? It's not that it was just a weak rally or bounce from there. This was a pretty strong move. The stock went from 85 to 111, so about 30%, and it was a nice surge. You can see that here, right? This was the bottom. We got a nice surge. RSI got overbought, which showed us that there's strength in this move, and I think it's just making a higher low over here. All right, this is roughly a 618 retracement. I know this chart's a little messy, but this is basically a 618 retracement of this initial surge. All right, if you want me to just try it again here. So you can see that here. This is a 618 retracement. I think it's forming a higher low. It should really not go lower from here, right? All the stars are aligned. So I think we just wait. The pattern is formed. So I believe now comes the re-rating mode where the stock starts to go higher. And my target for that is, roughly 170 to 175, maybe 180. Well, I think that's a pretty reasonable target, which I think should come over the next couple months. So that way the stock would have basically from $90, let's just say round figure 90 to 180. So that's a doubling of the stock. So that's just a trade, not an investment. If there is an investment thesis, but that's a little long term. As of right now, my trade is a pandemic, so that's how I'm set up right now. All right, I'll leave it at that. Thank you.